Gold continues to hit record highs. We saw the December future trading above $4,000 US today. Our guest thinks there's a good case to make that this rally will keep going. She's also talking about the pros, the pluses of raising Canadian broad market exposure, and also the promise of thematic ETFs such as AI and defense. We are joined by Valerie Grimba, Director of Global ETF Strategy at RBC Capital Markets. Valerie, thank you so much indeed for joining us. Great having you here. You think there's a bullish case to be made for gold, and ETFs are perfect for that.
Yes, exactly. It's a great way to get exposure to either just holding the physical gold bullion or also owning gold miners. And so we do think there's a lot of structural tailwinds here. We've been recommending gold within an ETF for the last 18 months, but the trends are very much the same. And we think they're structural right now in nature and that these tailwinds will continue to help with the momentum of this rally. And so what are we talking about here? It's kind of the geopolitical uncertainty, the fact that rates are moving lower, sticky inflation, and then, of course, this is all kind of pouring into this store of value, and there's momentum kind of buying at work here as well. So we do think that the gold price can kind of rebase higher here, and that you might want to consider owning gold exposure through an ETF or also a basket of gold miners.
I mean, one that leaps to mind, I don't know if you're talking about it specifically, would be XGD, that tracks gold miners.
Correct. And this is no, that's okay. It's a global index as well. So I think it's something like 60% Canadian in there, but also a few other plays that are listed in the US and South Africa as well. So a little bit of geographic diversity.
Talk about the Canadian broad market. I mean, we often focus naturally on the TSX 60, the blue chip stocks. Is there a case to be made for seeking a broader ETF, broader equity exposure?
Yes, this really much has been the story of the last quarter, and we also think that this trend is your friend and it's going to be here to stay for a little bit longer. We actually saw the TSX composite outperform the 60 by a full percentage point in the past quarter. So the 60 returned 11.5% and the composite 12.5%. So why is that? Sure, you have the Canadian banks doing really well, but then you have these torquier areas, and definitely gold mining stocks, the smaller ones, contributed to this as well, but they are moving in a greater steps here. And so we saw outperformance of the composite, which holds over 200 Canadian equities as opposed to the largest 60. And we think that trend is still going to be at work for the coming quarter as well. And
then one category that's also been catching your eye, AI and defense-focused ETFs.
Yes, it's almost like 2021 all over again, and thematic ETFs are really having a moment here. So we are seeing big inflows into defense ETFs. They've performed very well. So this is a story of performance and fund flows moving in tandem higher. We've also seen AI, which we would recommend doing due diligence on what the AI ETF actually holds, because that'll run the gamut there, whether you're buying companies that are making AI, or ones that are participating in AI, making their businesses a better place. And then also we're seeing other pockets of thematic ETFs do well, like nuclear or uranium ETFs and rare earth ETFs. And really, this area is growing here.
Valerie, always great having you join us. Thanks very much.
Thank you, Andrew.
Valerie Grimba, Director of Global ETF Strategy at RBC Capital Markets.